5 best-performing leveraged ETFs. Wall Street's first half of the year was electrifying, driven by artificial intelligence excitement, potential rate cuts, and a resilient economy. This surge led to a spotlight on leveraged exchange-traded funds, or ETFs. Leveraged ETFs offer amplified exposure, often 2 or 3 times, to the daily performance of an index. They use strategies like futures or swaps to achieve this. A swap is a derivative contract that involves the exchange of cash flows related to a financial security. Since most of these ETFs seek to attain their goals on a daily basis, their performances could vary significantly from the performance of their underlying index or benchmark over a longer period compared with a shorter period. Due to their compounding effect, investors can enjoy higher returns in a short period, as long as the provided trend remains on the track. In other words, they promise high returns, but they come with increased risk. Among the top performers, T-Rex 2X Long NVIDIA Daily Target ETF, or NVDX, soared over 275% year-to-date, magnifying NVIDIA's daily performance, which is up over 140% so far this year. The ETF is, however, down over 40% since its 52-week high in last June, and right before the yen carry trade affected the tech sector, and particularly NVIDIA stock. So if you have bought the NVDX around that time, and have kept it until now, you're feeling the pain of the risk these ETFs naturally have. ProShares Ultra Semiconductors, or USD, gained about 120% in 2024, doubling the Dow Jones US Semiconductors Index this year. Again, due to the yen carry trading crash in August, the ETF is down over 32% since its 52-week high in last June. BMO Rex Microsectors. FANG plus Index 3X Leveraged ETN, or FNGU, rose over 92% so far this year, tripling exposure to the NYSE FANG index. The risk with FNGU was shown to those who bought in early July this year, which turned out to be at 52-week high so far, and that the ETF is now down over 25% from that peak. ProShares Ultra Pro, QQ or TQQ, and Ultra Pro S&P 500 or UPRO offer 3 times the leveraged exposure to the NASDAQ 100 and S&P 500 indexes, respectively. They increased over 45% and 56% so far this year. TQQQ is down 44% from its 52-week high in early July this year, while UPRO is down only a little more than 2%, proving the advantage of the leveraged ETF on a more diverse index, S&P 500. And let's look at this one. The 2X Bitcoin Strategy ETF, or BitEX, climbed only about 11% year-to-date, while BitEX was up 132% year-to-date in last March when Bitcoin recorded a new high. But since then, BitEX is down over 52%. This gets more ugly when you realize that Bitcoin is up over 41% so far this year, and that BitEX could not achieve its goal, which was to double the return of Bitcoin. The NASDAQ Composite led with a 21% rise in 2024, while the S&P 500 and Dow Jones Industrial gained about 20% and 11%, respectively. With bullish sentiments, these leveraged ETFs remain investor favorites, while the risk is growing too since we are entering a lower interest rate landscape. Thanks for watching. Don't forget to like and subscribe. Market news, short and sweet.